On Wall Street, value investor Bob Olstein has made some very brilliant calls himself, but now he's making a new call. The case for active investing. Listen.
I believe it's people's job to find active managers. You have even the governor of Pennsylvania who says there's no risk in the indexes. Well, the indexes were the ones who bought Enron. They bought WorldCom. It's robot investing. All of the money is going to indexing. That's the du jour of the day.
Bob is going to be on Wall Street Week come this Friday, but in the meantime, a guy who disagrees, Tom Lydon, CEO of ETF Trends. So Bob is saying, you know what, pay somebody who's very smart to figure out which stocks to pick, so-called active investing. You say, better to go with ETFs, baskets of stocks that win for themselves.
Liz, if I owned a mutual fund company, I'd put the hate on ETFs as well. They're scared to death. $200 billion came out of actively managed mutual funds last year, while $125 billion went into ETFs. People today want diversification, they want transparency, they want low cost, and that's what ETFs are giving investors. They don't want to pay the high fees, the lack of transparency, and the underperformance.
Yeah, well, Buffett's on your side. He says you'll always win if you just go into the S&P index versus some fancy pants manager. But let's get to your favorites right now. You like Guggenheim S&P 500 equal weight, PowerShares FTSE RAFI US 1000. And looking at those two, tell us what the thread is that's common here that would help our viewer investors.
So to Bob's point, if you buy the S&P 500 and it happens to be a lousy stock that has a big weight, with an equal weight, 500 stocks having an equal weight with a Guggenheim RSP, they are equally participating in performance as opposed to the top 10 stocks owning 18% of the allocation. Cap weighted indexes really are old. We're doing a shift with this smart beta movement, and more are coming on. Now, smart beta was really the grandfather of smart beta 10 years ago with Rob Arnott and FTSE RAFI. He's done a great job of putting a plan together where fundamental indexing or value investing has come to the ETF marketplace. And they've done a fantastic job with the PowerShares FTSE RAFI ETF.
Yeah. Well, 979 hedge funds have closed shop over the past couple of years, so it's very difficult at the moment to sit there and say that active managers that you pay a lot of money to do better than just an index. Great to see you, Tom. Tom Lydon of ETFtrends.com. Looks like as this closing bell rings, we do not hold the 18,000 level.